It's March 16th. Sounds like it's going to be Monday, Bloody Monday. I'm going to throw out some stuff real quick in pieces, so I'll be in and out, and hopefully you guys will be able to absorb it a little bit easier rather than do one long 40-minute video or whatever and not be timely. So I posted a price target on SPY in the last video. I'm not trying to scare anybody. It's something that's going to take months, but of 195. I do have a Fibonacci retracement that I was looking at of the 242 area. And obviously you guys know the last video where I was able to determine what the most important candles are for looking at our technical analysis, and it was pretty spot on. Obviously we used that candle of the directional change from the descending tops here on the market where it was apparently going to roll over and we're going to get this long-term bear, and we kind of rejected that and retested it. So this was my important candle. We're trying to find some new super important candles for our technical analysis, which happens to be a little bit different than traditional. But you can see it obviously lined up perfectly with that big bounce we had, the biggest bounce in market history on a, I guess maybe on a percentage, but definitely on a numerical basis. So where do we go to now? One of the Fibonacci's that I ran was not top to bottom on any near-term range that we've had, but I moved some numbers around here and got to a 242 even area on SPY, and we're kind of focusing in on this area right in here on the market, trying to figure out, you know, the candles of importance and price rejections and whatnot. So it kind of lines up in this area somewhere in the lower body part of this candle. Actually, it's pretty close to the opening that we saw back on December 27th in the V recovery. But 242 is a number that I'm coming up with for now. Obviously, I'll show you some charts later that I'm looking at that obviously show a lot lower numbers. As far as the VIX, I think we had a record in 2008, 2009 was right around 89 on the VIX, so we have a little bit more wiggle room there. So UVXY trade probably has a little bit more to the upside. But you know, you're chasing stuff that's already, you know, so far ahead. You got to start thinking in reverse, start thinking bounce, and then we get the short if we get a bounce. So a couple scenarios come to mind, and I'll go through those shortly on the next video. But 242 is our point of reference right now. We could go through that temporarily, but hard to start shorting and chasing stuff down and buying volatility UVXY. But there's going to be some setups if we do bounce. Obviously options trades are there as well, keeping those targets in mind. But I think scaling in and scaling out is going to be what we're trying to do here for longer term buys. Picking your price points, you know, maybe some airlines since they're subsidized by the government. I'd be avoiding stuff like real estate ETFs. I think commodities go lower too, but you're gonna have some wild swings in gold and whatnot. So I'll get a little bit more information out later. I need to start looking at some charts forming throughout the day so we can kind of gauge how to play this out. We really don't know what's going to happen here once the market opens. Could we continue to go down? Yes, we could. And then we're going to have to regroup and figure out some entries for bounces. That's the game plan for now, though. So keep that in mind, and I'll talk to you guys probably after the market opens, or maybe one more video before it opens with some ideas.